Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Welcome back to the Ask Ralph show. I get this question quite a bit in my practice, and that is, Ralph, how do I know how to maximize my Social Security check? And where I'm not an expert in Social Security, I came across an article by Sean Williams that's ran on April 16th, which talks about, in general, 7 factors that affect your Social Security check. And I thought this was really a good thing to talk about as part of the show today. What he notes here is 62.1 million payouts are made to eligible beneficiaries, nearly 69% of whom are retired workers. And in this case, 3 out of 5 lean on Social Security to account for at least half of their income. So this is really an important topic. So these are 7 factors that may vary depending upon how much income you earn in your Social Security. So number 1, these are the 7 factors. Your earnings history. And what they're talking about here is your earnings really do matter, your annual earnings. The more you earn each year, up to the payroll tax earnings cap in 2018 is $128,400, the better chance you have of receiving a bigger monthly payout when you retire. Now, one of the things you need to know is that Social Security will adjust your earnings for inflation, meaning those low earning years when you entered the workforce should receive an inflation adjusted boost. But it really does come down to how much your earnings are. So the more you earn, the more Social Security benefits you're going to get, up to that cap. Next thing, number 2, your work history. Social Security takes your work history into account when calculating your monthly payout. The Social Security Administration will use 35 of your highest earning inflation-adjusted years when calculating your retirement benefit. What this means is that you should work a minimum of 35 years if you want to maximize your monthly payout. For each year less of 35 worked, $0 is averaged into your annual earnings. Plus, if you earn more annually later in life, you can replace it for low-earning inflation-adjusted years earlier in your career, potentially boosting your monthly check. So, your earnings history and your work history. Number 3, your birth year. And what we're talking about here is your full retirement age. And if you've been listening to my show for any length of time, we talk about this constantly. But the year you were born is important as it determines what is your full retirement age. Your full retirement age is between age 65 and 67, at which the Social Security Administration deems you eligible to receive 100% of your benefit. What I'm talking about here is that if you collect Social Security prior to your full retirement age, you are going to get a diminished benefit. Whereas if you retire after your full retirement age, you'll get an increased benefit. Think about it in these terms. Age 62, you can start. You're going to get 25% less benefits. Then hits the full retirement age. At age 70, you can take it and get about 25%. So that's another area. If you're looking to maximize your Social Security benefits, it comes down to number 4, your claiming age. And that goes right into what we're talking about. Perhaps the biggest wild card on this list is the age you should start receiving benefits. And I've talked about this in a different show. I would recommend you go back and listen to that. You should know that all our shows are on podcasts. You can go back and listen to those if you want. If you begin taking age benefits at age 62 or any point thereafter, but you're going to have less benefits. And it's basically 8% per year up till age 70. And what they mention here in this article is a retired worker claiming at age 70 can be paid up to 76% more a month than a retired worker claiming at age 62. And this is a big game changer for people, especially if you haven't done a great job of planning for retirement outside of your Social Security savings. So this is an area you really need to focus. And as people live to be older, the idea of waiting till 70 isn't that far-fetched. And again, I've talked about this in the past. It really depends on your health. It depends on, your life expectancy. What type of, life, what's going on with your health? Can you still work? If you're still working, there's even more of a benefit, and that goes into number 5. If you're still working when you receive benefits, it could be important. The Social Security employs what's known as the retirement earnings test on beneficiaries who claim benefits prior to reaching their full retirement age. If you earn too much while working and receiving benefits, the Social Security Administration could withhold some or all of your benefits. So how does this work? It works like this. If you won't reach your full retirement age in 2018, the SSA, Social Security Administration, could withhold $1 in benefits for every $2 in income above $17,400. So what this basically means, and I get this question a lot from clients, is if you decide to take your benefits early at age 62, you can go get a job. Absolutely, you can do that. Now, the downside to that is if you earn more than $17,040, they're going to start taking away some of your benefits, and it's $1 in benefits for every $2 you earn. Now, why is this a big deal? It's a big deal because let's say you decide to retire at 62 and you go on Social Security. Things are going okay, but then you start to notice, I'm not really able to pay my bills on this level of Social Security, and my healthcare costs are expensive. You say, well, I'm going to go get a job. Well, now all of a sudden you've created a problem for yourself, because now if you go get a job and you make more than $17,040, you're going to lose benefits. And here's the other side of this. Once you get to $45,360, you'll lose $1 in benefits for every $3 in income above the $45,360. And so that's where, deciding on what age you're going to retire and if you're still working, it doesn't really make a lot of sense in my view to start collecting those Social Security benefits, because once you hit full retirement age, there is no there's no earnings limit. You can earn as much as you want to. Another thing they talk about here, number 6, is your total income. And this is where it gets complicated. This is not going to impact your Social Security check, but your benefits may be taxable at federal level if you earn too much. And what they're talking about here is in 1983, the provision was set up to allow the IRS to tax half of a person's benefits if they earn more than $25,000 in adjusted gross income as a single taxpayer, or $32,000 as a married filing joint. And then in 1993, they added a second layer that took this number up to 85% if you earn more than $34,000 single or $44,000 as a couple filing jointly. So that's another consideration, when you start to take this Social Security income, look at your other, income sources, and even if you're at full retirement age, let's say you're at 66, but let's say you're still working, or let's say you've got a great pension coming in. If you decide to take those Social Security benefits, you may end up, paying tax on 85% of those. So you really have to factor that into, what's going on. The final thing they mention here, and I'm not going to talk a lot about this, is, where you live. And don't get me wrong. You don't get less benefits or more benefits depending upon the state you live in. But here's the problem. 13 states tax Social Security benefits. So Delaware doesn't happen to be one that does. They give you an exemption from that. But there are some states, and they mention here, like Rhode Island, Missouri, and Kansas have high income exemptions, allowing most seniors to avoid state level taxation. Others, like Vermont and West Virginia, mirror the federal tax schedule. And what he says here is a great way to say it. He provides a double whammy for seniors. So that's something else to consider. So, when you're deciding on, 7 factors that affect your Social Security check, make sure you consider all of them. Your earning history, your work history, your birth year, your claiming age, if you're still working, and your total income. So you can really think about, how is this going to impact your bottom line? Are you going to be paying a lot more in tax by taking your benefits, at a certain age? So hopefully this was helpful to demystify some of the ideas of getting Social Security benefits.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.